welcome to this video. It's DC Capital. I will do a weekly summary and market outlook about the E-mini S&P 500. We will start with the weekly summary and finish the video with the market outlook for the upcoming trading week. Most of the concepts shown in the video are credited to ICT or the Inner Circle Trader. Definitely make sure to check him out, and I will put a link to his channel in the video description. Alright, here you can see the micro E-mini S&P 500 chart. This is a 15-minute time frame, and you can see the entire trading week here. This is Monday trading, Tuesday, Wednesday, Thursday and Friday, and those red lines are showing the New York midnight opening price, and if we are bearish, we want to see price trading higher than the opening price to sell into the rally, or we want to see price at this midnight opening price to short. For the bullish side of things, again, we want to see price trading lower than the midnight opening price to buy, or we want to see price at the midnight opening price to buy from. We can see that Monday creates the high of the week, and Friday is closing the entire trading week with a down close candle. This is Monday's trading, and you can see here the 5-minute chart of the micro E-mini S&P 500, and this is an afternoon PM session setup here. And first of all, price rated buy side liquidity, buy orders becoming now market orders, and price is trading lower. On this candle we have the bearish market structure shift. Price is trading lower, and there is resting sell side liquidity here, and we have relative equal lows. So we can use that as the first profit objective. Price is trading higher, and here is the fair value gap and a beautiful order block on the 5-minute chart. This becomes our entry. We are executing our short in the fair value gap. The stop loss is here on this swing high, and you can see that we are buying at the 9:30 opening price. This is equities open, and price is trading lower. We are taking our first partials below those equal lows here, and finally price is trading lower into a discount and is hitting our full profit target. You can see here that price measured from this swing high to the swing low is also in a short-term premium. Okay, let's cover those key facts on this specific setup here. The trade duration in total is 1 hour and 40 minutes. The full take profit is 49 pips. We are executing this trade on a Monday at 1:50 New York local time, past midday, afternoon session, and the risk to reward ratio is 3.06. Okay, let's go right into the next trading day. This is Tuesday. Again, the 5-minute chart, and what we are seeing here is that at 8:30 news embargo we took took the buy side liquidity here. These are relative equal highs here with resting buy side liquidity. So market is trending higher, pairing up those orders, and price is trading lower. This is the bearish market structure shift on here and on here. Again, we can see that we have a fair value gap in a deep premium market, and also there's an order block here, and we are above the 830s open and the 930s open. Price finally hits our full take profit here on the sell side liquidity. The trade duration here is 25 minutes, pips to full profit 26.25. Time of day is 9:55 in the morning. It's a Tuesday, and this trade hits a risk to reward of 2.63. What is really important here is also that at 8:30 there's news coming out. There's the PPI number, Producer Price Index, and what we can see here is that price is using this liquidity here on that specific event to rate the buy side liquidity and then pairing up orders to sell into a discount market. Okay, it's the middle of the week and it's Wednesday. Again, we are on a 5-minute chart for the micro E-mini S&P 500, and during FOMC there's a lot of engineered liquidity. So first, the market is rating those buy stops here and here. Then it's declining lower, taking out those relative equal lows, creates this fair value gap in here, and this becomes our first potential trading setup. Also, you can see here that price is respecting this bearish order block nicely, and also we are trading above the midnight opening price, and we are trading at the 8:30 opening price. We are selling as soon as price mitigates this fair value gap here and targeting the 5-minute fair value gap in this deep discount market. In this, you can look also for long setups, because the market maker is liquidating their short position and is covering that with a long position. And you can see here that price is trading higher from a discount market into a deep premium market and closes the day here. Let's go through some key facts on this trade. This specific trade on FOMC event is only 15 minutes long, and a full profit is about to get hit with 42.25 pips. We are entering this position at 2:15 in the afternoon, New York local time. Obviously it's a Wednesday, and the risk to reward is 1.84. Okay, last trading day for me this week. It's Thursday, the 16th of June. We can see here that at 8:30 news embargo lifts into buy stops, into buy side liquidity. Buy orders are becoming market orders, and market maker is using this engineered liquidity to short, to pay up the orders. We can see here that price is also in a deep premium market. is trading lower, and on this candle here we can see a bearish order block coupled with this fair value gap. Big displacement down, we can use that to enter a short position, put the stop loss above this short-term high. There's a little bit of heat on this trade, of course, but we have to endure that. It's only a 2-minute candle because we are here on this 2-minute chart for the micro E-mini S&P 500. And finally, price is trading lower into a deep discount. My target is this sell side liquidity in form of relative equal loads. And noticed also that price is trading below this 830 opening price and is coming back above it and is rejecting it really nicely. And this becomes also another confluence that we have the 830 opening price acting as resistance here. The trade duration on this trade is 30 minutes. We need 17.25 pips to our full take profit. It's Thursday, personally my last trading day for this week. We entered this trade at 9 a.m. in the morning, and we have a risk to reward ratio of 2.88. With this I will finish my weekly review, and let's jump right into the market outlook for the upcoming trading week. Okay, here we are at the market outlook, and you see here this daily chart of the micro E-mini S&P 500. The overall fundamental aspect is bearish. We are trading lower. Also, the Federal Reserve is increasing interest rates, and this will lead into a really strong US dollar and the risk off environment. Currency majors are declining. The commodity index, the CRB index, is declining. Stocks are declining, and I'm expecting this downside momentum to continue, but price can of course retrace a little bit, and there's a potential bearish order block here on the daily chart that price can go into. But for me, I'm seeing this sell side liquidity here being taken, and this makes me long term to intermediate term bearish on the daily chart for the E-mini S&P 500. Let's go right into the 1 hour chart of the E-mini S&P, and what we can see here is that price is trading lower, creates this beautiful bearish order block and leaves a fair value gap. And now look closely, all candles are respecting that fair value gap and this bearish order block and are closing below it. Price recently broke market structure to the downside, and I'm expecting price on the 1 hour chart to retrace a little bit to mitigate this fair value gap here, and then to trade lower into this 1 hour bullish order block to finally trade higher and taking out this buy side liquidity here, and is trading into equilibrium or a premium price. On this chart you can see the premium area, the equilibrium price point, and the discount area based from this recent swing high to swing low on the 1 hour chart for the E-mini S&P 500. And this is my bullish scenario. I'm looking for price to trade higher, clearing out that buy side, and maybe mitigating this fair value gap at an equilibrium price point, or even trading higher into a premium area, into a fair value gap like this or like this to cover their longs and establishing new short positions. But for me, this bullish scenario is unlikely because fundamentally speaking, we are in a risk off environment and I'm expecting the S&P 500 to trade lower. That's it for the weekly summary and the market outlook. I will finish the video here. Thank you for watching and I will see you in the next video.